Hello and welcome to What is Spread Betting, presented by spreadbettingportal.com. So what is spread betting, or what is financial spread betting? Because in the States, spread betting is something very different. Spread betting in the States is concentrating more on sports, and rather than financial spread betting, which in most of Europe and in the UK and other countries, it's the focus and the assumption to do with finances. One thing you have to understand with financial spread betting is it's not really gambling. Many assume that people that trade in financial spread betting, that they're kind of just ridiculously throwing money away and just gambling. You know, they're just doing it with no real sort of care or analysis. It's just like, well, I expect the market to go up or down, and therefore I'll put, £50 on whether it will do that or not. And that's not necessarily, well, that really isn't the case in terms of how financial spread betting works. So it really isn't gambling, because gambling really is just the expectation of a win or lose outcome with a known result. The known result being that if you win, then you'll get, say, for instance, if you gamble on horses, you get, like, say, 4-to-1. Means you get 4 times your bet plus your original stake, but obviously only if your horse wins. Now, spread betting and trading in spreads is completely removed from that. It's nothing like that at all. So really, why is it called betting? If it's not like betting and we're not really gambling, why does it have that in there? Well, one of the key reasons why it's called spread betting is how it's classified. And because of the classification of having the bet in there, and because you're trading not in the live market, you're not actually trading anything physical. There's no intrinsic value to your trade. There's nothing there that you can sell. You're not buying shares or anything. All you're doing is you're taking a contrary position against that of your spread betting broker. And the reasons why it's called spread betting is because it's this classification of being betting. It allows for one of the biggest and possibly the largest advantage with spread betting is that there's tax-free profits predominantly. Obviously depends on which country you're in, but most countries that have gambling allow profits on gambling to be tax-free, and this is the case for the UK. So because it's classified as a bet and not a trade, because a trade gives the impression that you're actually exchanging money for something, rather than we're taking, with spread betting, we're just taking a contrary position against that of the broker. There's nothing actually being traded. So one of the key things is that you have to understand with financial spread betting is that all we're doing is we're just taking a opposite view of what the broker is saying, because they will always hedge on pretty much every trade or groups of trades against the spread betting company. We're just taking the opposite view. So that's where the betting part comes in. So where does the whole trading part of it come in? Well, as I put here, it's betting, Jim, but not as we know it. It's only betting, as I've previously discussed. It's only betting because of the classification of it, and because we're not actually physically trading something. We're not trading shares or options, or there's no contract involved. So we are essentially still betting, because we're taking this contrary view where the stock or chart will be on an ongoing basis. But where the trading comes in, and where skills, and this is where a lot of people just don't assume this happens, but those that do trade financial spread bets do actually make their decisions, or should make their decisions, on what they're going to trade or bet based on a real live financial chart, which will go up and down in value, almost identically mirroring that of the live market. And the techniques and methods and so on that are used are the same as it would be as if you were really trading. So it's the whole classification of it is betting. You're not actually trading something physical that in terms of a contract or anything like that. It's just you're trading against your broker. But the actual skills and terminology and methods of finding trades and everything like that is the same as if you were actually really trading. So how do you really trade them? Well, we can't really go into the technical aspects of trading them in this video because it's such an enormous subject in its own right, but there are other videos on the technical aspects of it. But essentially all you need to do is you open a spread betting account via one of the offers on our website, and then essentially all you do is you deposit a sum of money. And one of the key things you have to understand is that when you are using money for trading like this, is that the money that you're placing is not earmarked for anything. You don't, you're not reliant on that money. So one of the best bits of advice I always give is if you lost that money right now, this minute, would it affect your life? And if the answer is yes, and I mean affect your life in even the smallest of ways, if it means you're having to cut back on certain things, or perhaps you not going on holiday this year, or whatever it is, but if that money disappeared and it affected whatever it is you do or your plans that you have, if that's the case, then you shouldn't be trading that money. You only trade money that you can just literally just wave goodbye to and not be bothered if you ever saw of again. Because that's the best way of thinking in terms of trading, that the pressure is off you, because obviously you want to return, but you don't want to be put under additional pressure that you can't lose that money. Now, obviously you don't want to lose that money, you want to see it grow. But if you have that pressure there of, you know, you've placed this deposit in your account and it's money that you can't lose, then that changes the whole sort of feeling of your trading. It becomes kind of fear-based, and that's not good for a trader. So you place this deposit a sum of money with your in your account, and then you're using that money you just place trades, and each trade you make, the spread betting broker will deduct a part of that as margin from your account to cover that trade. And that's how you begin to trade. So a lot of people begin to think, well, is it a simple win and lose? Well, no, those are sort of binary bets, which is a completely different thing altogether, and something I'm not particularly fond of. It's not something I would recommend. But spread bets are based on the current market value of a given trade, allowing you to win more the more you are right in one direction. So if you're saying it's going to go up in value, it's not a strict, you know, you win X amount or you lose X amount. If you're right, you continue making more and more profit. If you lose, you get it wrong, you're going in the wrong direction, then you start to lose more and more, unless obviously if you don't close the trade or so on. So there's a real yin and yang there with the trade. So the more you are correct, the more you win, and obviously the more you are incorrect, the more you get it wrong, the more you will lose. So is it easy? Well, the actual aspects of placing trades is relatively easy. In fact, the platforms now are hugely easy to use and very quick. But what you have to understand is that spread betting is still fundamentally trading. You're using the same tools, the techniques and methods, the same terminology. That everything you do to decide on what to trade is identical in many aspects to how it would be if you were actually a professional trader. So that should never be taken lightly, and that takes a good amount of knowledge and understanding of how the markets work, how analysis works, how you work in the market, and how you work with trades, and how you manage trades. So do not be mistaken, trading obviously is not for everyone, and it really isn't easy, but when you do get it right, when you find your way of trading, everyone's different, the profits that you can make can be high. Of course, if you get it wrong, the losses that you make can equally be as high. And one of the last things that I've heard that you can tend to hear over the years is it a scam? You know, it sounds like a scam, doesn't sound right. You know, if you can sort of make money when the market's going down, or make money when the, you know, get this tax-free money, you know, it doesn't sound right. Surely we should be paying tax on it, and surely, you know, somebody should be losing money somewhere if it's going in the wrong direction, and or go, you know, if you're trading short and it's going down, somebody somewhere must be losing money, and it kind of isn't that way with spread betting. So there is this assumption that financial spread betting is a little bit dodgy, that it's a scam. But you know, spread betting has been around since the 80s. It was formed by the guy called Stuart Wheeler, who started IG Index. And I think the IG initially stands for Investors Gold or something. And he was basically set up this a book, a betting book with all his other. He was a trader, and he was like a betting book on the spot price of gold with all his other trading friends, and that's kind of how it started in the 70s, late 70s, and then in the 80s he created a company, and it was more sort of professional traders that were involved in it, and it was all kind of word of mouth as to how it worked. And then sort of in the 80s and 90s and where we are today, it's matured massively and become a global phenomena in trading, really. So it's not dodgy at all, and the majority of the trading websites you see are run by some of the largest brokers in the world. So you know, you've got that protection there. And also some of the lesser sort of well-known spread betting companies that are there are actually what are called white labels of the larger brokers. So it's a site that looks completely different, but is actually controlled and monitored and run and a legal entity in its own under the actual larger broker. So yeah, so you've also got that protection with the larger brokers, of course, and the fact that the government protects any deposit made with a broker up to a certain sum of money. But you know, the government does provide some protection there as well with what you're depositing, because it's a deposit. It's not their money. You're not giving them money. You're depositing it with them for them to look after. You're obviously trading it, and you're responsible for that. But if money goes, or the company goes bust, then, you know, or the broker goes bust, then you're protected by the government to up to a certain degree. I think it might be 58,000. I'm not too sure, but yeah, so you are protected there. So there we are with this, with today's video. Don't forget, you can come and visit us at Spread Betting Portal, where you can learn more on spread betting. We've got plenty of videos.